Welcome back, and joining me for a closer look at what's played out on the market scene today is Jacobus Brink from Schimidt Family Office. Thank you so much for your time, Jacobus. I see that the gold miners did most of the heavy lifting in our market today. Is this all in the pursuit of safety?
Eisenhower, always good to be on the show. Thank you very much. Yeah, I think to a large extent it's a dollar story. We obviously ended the week last week post the non-farm payrolls numbers, which were not only were they quite a bit below on what was expected, but the previous 2 months also actually were revised substantially lower by I think about 258,000 jobs. I think that scared the market a little bit. I think if you just listen to the rhetoric from the Fed over the last number of meetings, they weren't too concerned about inflation, but the big thing that they were actually looking to see if there was any weakness coming through is in the jobs market. So this was quite a substantial downgrade, and obviously we saw the fallout post the downgrade with President Trump firing the head of the Bureau of Labor Statistics. And I think, that if you just sort of read that in conjunction with some of the earlier numbers we saw earlier in the week, manufacturing PMI numbers were also quite weak. And then in contrast with that, the personal consumption expenditure, which is the Fed's preferred inflation gauge, came out a little bit hotter. So we've been on this train for a while now that, the worst thing for the US is to get themselves in a situation where, the dreaded stagflation word comes into play again. So I think that to a large extent, we saw yields selling off across the curve last week, especially on Friday. Dollar really strengthened. It was sort of at a level where it looked like it was going to break to the upside, and we were going to see some more dollar strength. But that entirely reversed post those NFP numbers on Friday, and that's pretty much carried through into this morning. So we saw all of the commodities up. Gold was up quite strongly, and I think that sort of fed through just into, especially in our market, it was quite commodity heavy, and that was pretty much what drove everything. I think looking forward, we were typically expect a turnaround Tuesday, but we pretty much saw manic Monday today with all of the indices just up. I think mostly on the inflation, on the interest rate, hope for interest rate cuts. That's the September cuts now pricing in quite a substantial increase versus last week. But I think this week's also going to be interesting on the earnings side. We have AMD reporting tomorrow, which could give us an indication on whether this whole AI story is actually a broader thing than just with NVIDIA. Caterpillar's also out with earnings. That's always a big bellwether for the just sort of industrial activity globally. And the ones we like to watch just to get a sense of, what the consumer is actually doing in the US is Walt Disney and McDonald's. So I think it's going to be an interesting week for earnings as well.
All right. Well, talking about earnings, Goldfields gave us an interim trading update today. And actually, we were talking about, the gold miners leading the way today. Is Goldfields in a sweet spot right now?
Yeah, it seems so. So in general, just from a macro view, the gold price obviously drove the miners higher quite substantially, but very much an idiosyncratic one for Goldfields specifically. I think they ended up about almost 6% for the day. So they reported that they're expecting a 203% increase year on year in headline earnings. And solid guidance from them, mostly because of the higher gold prices, as well as higher production and volumes coming through. So no, I think it is sort of a sweet spot that they're finding themselves in, and keep an eye on that one.
All right. Well, another miner that came out with an annual production update was a PGM miner, Impala Platinum. They churned out lower production volumes, the company describing the performance as commendable. What's your take on that update?
Yeah, I must say it was a little bit disappointing, I think, at the end. They suggesting that it is commendable, but I think these PGMs should really be taking serious advantage of the just the general bounce we're seeing in PGMs across the board. We're still expecting the dollar to remain weak. We, as I said earlier, we were sort of on the cusp of breaking trend there and, going into a rising dollar again, but then we saw the NFP numbers and interest rate yields plummeting. So a little bit of a disappointing one from them, but I suppose it's not all bad. There's one or two things you can look at that might be a little bit positive, but yeah, in the end, pretty disappointing.
Yeah. All right. Well, let's take a look at Impact. They came out with interim results. Revenue up over 3%, but that did not translate to the bottom line. The company highlighting a challenging trading environment. What stood out for you in those numbers?
Yeah, I think obviously a very challenging trading environment for them, but I think despite the economic downturn, we still saw fairly good volume growth, realized sort of almost across the board. They were offset by most of the declines in especially the carton board, the corrugations, plastics, etc. But I think also if you look from a strategic point of view, I think Bruce Strong did highlight it, that they are making good progress, from some of their strategic capital projects. Definitely a big focus on some of their growth sectors going forward, and also investment in innovation, higher margin type of products. And, I think also, so there's a few sort of positives I think you can take out of it, despite the fact that it wasn't, just great in general, but not too bad. I think that the share did sell off initially, but it ended up, I think, about 3% higher. So I think the market's sort of looking through the latest disappointment.
Very, very interesting. Well, Jacobus, let's get to your stock pick for today. What are you choosing?
So, as I always say, we're a family office. We don't need to go and buy just the Naspers and the Nvidias of the world. So we like to go and look for some really nice asymmetric opportunities. One we've been looking at recently, it's quite interesting, is Root Insurance. It's listed on the NASDAQ. It's headquartered in Columbus, Ohio. And they focus on embedded insurance and specifically forming sort of strategic partnerships with certain businesses. And one of those strategic partnerships are actually with Carvana. Carvana, we saw them report the results last week. I think, record-breaking results. The stock was up substantially. But we haven't really seen Root move, in tandem with Carvana. So we do think there's a bit of a short interest overhang still there. And I think if this thing does start actually repricing, because currently it's trading at about 1x revenue, so very low. So I think, once it starts moving and it starts repricing, I think we could really see this thing shoot up quite substantially. So that's sort of one we're keeping an eye on for a short-term move.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today. Jacobus, really appreciated. That was Jacobus Brink from Schimidt Family Office.